Welcome back, and joining us to put the day's market moves into perspective is Jacobus Brink from SFO Investments. Thank you so much for your time, Jacobus. Quite a lot of divergence that we are seeing there when you look at the local bourse and the US markets. I mean, the JSE really just keeps on disappointing under a backdrop of US markets that have been reaching record high after record high. Is the JSE just not in a position to eke out any gains or any meaningful gains at this point?
Guys, and thanks so much for having me. Always a pleasure. I think it's to a large extent sentiment at this stage. I actually had a call with a fund manager that we invest with on the emerging market side, and she just sort of confirmed again. I think sentiment towards South Africa in general is just at rock bottom at this stage. You can argue, of course, that valuations are reflecting that. So I mean, there's a lot of cheap stuff around, but I think mostly investors are still probably going to be a bit nervous prior to the election outcome. So yes, obviously we do have some tail risks there. Should the Jacob Zuma's new party gain more momentum than the market or surveys currently expect. So I think that's sort of a thing that the market might still be pricing in. So I think just sort of negative sentiment in general is what's keeping the JSE down at this stage, despite the very, very lucrative valuations we're seeing.
Yeah, and listen, the JSE is on a roll of a red hanger sale on that front. Really, really cheap stuff that you can get there. I mean, just those US bourses, I mean, they keep pushing higher and higher. Are investors there in the US just shrugging off the macroeconomic risks that do still remain in the market?
It seems so. I think you hit the nail on the head there. If you just take this entire rally that we've seen post, November, the November pivot by the Fed, all of that pivot is pretty much the Fed has started talking back again now, and we're not seeing any retracement in the market. Last week was obviously sort of a culmination of a lot of things, but then mainly with the whole NVIDIA blowout. I mean, they added something like $270 billion to their market cap in a single day. So I think there's just a lot of sort of optimism around the US in general, despite the fact that we have started to see bond yields tick up again. And I think markets are probably going to be in a bit of a lull this week prior to Thursday's release of the personal consumption expenditure numbers, which is the Fed's preferred gauge of inflation. And it's going to be an interesting one, because obviously we saw an uptick in PPI numbers and in the CPI numbers at the end of Jan. I think it remains to be seen whether that's just a speed bump or it's going to be a pothole, because I think if we see any sort of uptick in the PCE numbers as well, there could be a serious re-rating, a repricing of what actually is going to happen. And at this stage, just had a look at it now, the market's currently expecting the Fed to only start really easing in June. The May cut is almost entirely priced out now. So it's going to be an interesting one.
All right. Yeah, pretty interesting also, as we also await those GDP numbers, where we will be sifting through the health of the US economy there. Let's come back home and take a look at some of the company news. Not a lot that's out, but Sasol, of course, a big one. It is the subject of a lot of debate. So it came out with interim results there, saying that the company continues to be pressurized by the macroeconomic environment, to the point where their core profit was 34% less than in the prior comparative period. I did give investors a dividend, though, an interim dividend. What did you dig out of those results?
Yeah, sort of expected it to some extent. I mean, pretty much all of the areas where they did make a bit of inroads was completely sort of, overshadowed by the underperformance of, state-owned enterprises, which are crucial, obviously, to their whole operation. I think there are still sort of areas where they can sort of cost cutting and better cost management can possibly creep in, but it's very limited to Europe, Asia, and the US. So not a lot of good news coming out there. I think we still have a fairly elevated oil price, and I think with all of the tension and everything going on in the Middle East, that to my mind could possibly put a bit of a sort of a floor on the oil price at this stage. So we could possibly see the oil trading higher, which could be a tailwind for them. But yeah, not a lot of positives at this stage to take out of it. And I think, it comes back to the conversation we had around the JSE in general, just sort of the negative investor sentiment that we have around it.
Yeah, and indeed we did see that share price dropping by about 2.5%. Let's go to Libstar. It came out with a year-end trading update. The food producers' revenue growing 5.8% for the full year. But the company does expect its headline earnings per share from continuing operations to drop by as much as 12.7%. But it does seem that things were better in the second half of the financial year. What stood out for investors as they shot up the share price by about 16% at some point?
Yeah, it's quite interesting. I mean, it was really quick out of the gates this morning, up 16% at one stage, and I think it ended actually flat for the day, more or less. Yeah, but I think it was more sort of an expectations thing. I think investors are sort of hoping that they've turned their strategies around. Yeah. Obviously, they were hit hard by load shedding in the first half last year, extra diesel costs and everything. But I think their cost management has been well. But as I mentioned, the share ending flat on the day. So I think a lot of that optimism sort of started to wane as investors were looking into more of the detail. And it's a very competitive environment that they are playing in. So not a bad set of results, I would say, in general. But yeah, I think sort of reality is setting in a little bit post that 16% jump this morning.
All right. Well, let's get to your stock pick quickly. Jacobus, what will it be today?
Yeah, so my stock pick, we've been sort of hammering on this one for a while now, the whole emerging market versus developed market trade. I think it's been underperforming for the better part of 6 odd years. But I mean, a lot of that is obviously linked to China. China makes up about 30% of that index. So my stock pick today, I think with the sort of better news we got out of China towards the end of the last week, as the Lunar New Year the holiday ended, we saw some large upticks, in consumer spending, and I think that was to a large extent what was still keeping China sort of, very depressed up until this stage. We saw some decreases in the 5-year mortgage rates by the central bank. So I think all of that will eventually sort of start to feed in and get investors more positive around China. So from a valuation point of view, the emerging market index is very much a lot better priced at this stage. And I just think, with China turning around, hopefully we can start to see a turnaround in the emerging market index. So yeah, Satrix emerging markets call for me.
Yeah, thank you so much for your time. I really appreciate your insights on what has been driving investor sentiment and money today, Jacobus. That was Jacobus Brink from SFO Investments.